Hello, currency traders. This is Imri, and welcome to today's currency recap. It is Thursday, March 23rd. Well, we had quite the volatile trading session today, especially in the wake of yesterday's chaotic Fed statement. We've seen whipsaw movements in currencies and stocks, not to mention commodities as well. So let's get right into it. S&P 500. Well, I mean, this has been the pattern for basically all the Fed days ever since the hiking cycle began. The market rallies off the back of the initial decision itself, and then during the press conference, things tend to go south. Yesterday was no exception. What's interesting today, however, is that stocks, rallied fiercely at the open, then they got slammed back down, and then they came back. The Dow ended the day up about 100 points higher. S&P pretty much flat. It's a very interesting environment right now. I think the S&P might have ended the day slightly positively as well, but it's a very interesting trading session that we're seeing here. Now, my personal hunch is that we're headed lower, not higher. Could be wrong on that, but I've been beating this kind of bearish drum for quite some time now, and I don't see any reason to stop. Same thing in the total world stock index, nothing really to add there. The Asian trading session was very mixed last night as well. Okay, so crypto, I was saying for a while, we've got to get above that resistance level from late August, and well, we've broken up above it. And that flips my bias from being bearish crypto to being bullish. Now, I don't think the entire crypto market is going to rally the same way that we've seen in the past. I think many smaller market cap coins are going to be left behind. Bitcoin, I'm particularly bullish on. I'm looking to buy Bitcoin on dips, Ethereum as well. And those are my two cryptocurrency picks. Look to buy them on dips. Giving the market here a -1 outlook. We're still below the 20-period moving average, basically flat on the 50, and the slope is pretty flat as well. Now, in terms of news, tomorrow, we've got flash manufacturing PMI and flash services PMI as well. So that's going to give the market a good hint as to how inflation is coming along, I suppose. Unless there's a major miss one way or the other on the expectations of the forecast of this report, I don't really see this being too big of a market mover. But we'll have to see. But like I said, I don't, unless there's an egregious miss on one side or the other, I don't think the market's gonna tank or melt up based on the outcome of this reading here. Now, jumping into currency analysis, what a day for cryptocurrency. Litecoin has been the laggard for some time now. Not today, up 7.5%. Impressive moves also in Ethereum and in Bitcoin. Over on the fiat currency side, it's a very interesting mix. I mean, the yen was the winner on the day, but so was the kiwi. Not something that you would typically expect to see. Generally, if we split the currency regimes into risk on and risk off, we'd expect the risk on currencies such as the Aussie, the Kiwi, and the Canadian dollar to outperform, while safe havens like the Japanese yen and the Swiss franc underperform. But the picture here in currencies, I guess, is indicative of the market's overall feelings, which I think are mixed. I think traders are still jockeying for position right now, and they're trying to figure out exactly what's going on. So just as equities trading was mixed, here we see currencies have been mixed as well, where we have the safe haven and the yen up on the day, but so was the New Zealand dollar. Now, in terms of velocity, I've got the yen at a +3, and then we've got the Canadian and Aussie dollars at -3 and -2 respectively. And we're just going to dive right into those baskets right now to take a look at some potential currency trades. Okay, so first up, here is what I've got in the New Zealand dollar. We're still trading within this falling wedge, and I do think eventually we are going to break out higher out of this wedge. Once that happens and we clear this upper resistance line, that would be my green light to start looking for trades being long the New Zealand dollar, not before. So we still have some work to do. In the US dollar, we can see these long lower wicks on these candlesticks here. That's telling me that there is some buying pressure coming into the US dollar. And we can see here that the overall pattern is kind of a falling wedge as well. So that's very interesting too. If we do break out the upper resistance line of this wedge, that would be my green light to look for long positions in the US dollar. The Japanese yen, I've been talking about for some time now, how I think it's time to be net bullish the yen. The unwind in the yen crosses is going to be epic once it really gets underway, and it hasn't even really gotten underway yet. I think there's still a lot more fireworks to go. My next target in the yen basket is for it to reach its highs from Thursday, May 12th. So I'm looking to buy the yen on pullbacks. And then the British pound, we've broken out of this triangle. Again, I'd look to buy the pound on pullbacks as well. And then as far as liability currencies go, I think the Canadian dollar is likely going to go ahead and test the September 2021 lows. So quite a bit lower to go in the Canadian dollar is my forecast. And then the Aussie dollar hasn't really made up its mind. But if we take out the support coming in December 2022, then I think that puts further downside into focus as well. So overall, I do think there are some exciting things setting up in currencies. Just have to be a little bit patient in terms of finding the right chart pattern setups on the right currency pairs. So in conclusion, proper position sizing in this market environment is more important than ever, and being highly selective of opportunities is more important than ever, especially when we're seeing these whipsaw moves in both directions. Eventually, the market's going to pick a direction, not just the stock market, but the currency markets as well. And I think it's going to the picture is going to become a lot more clear in terms of which currencies are going to be seen as assets and which ones will be seen as liabilities. Being nimble is likely better in this environment versus trying to have intermediate term trades. When you have markets whipsawing back and forth within one session, it makes swing trading very frustrating. So if being nimble is not in your trading plan, that's okay. Just be aware that the market conditions probably don't suit your trading plan right now if you're more on the intermediate term side of things like I am. So I tend to sit markets like this out, and I just wait until the conditions favor my trading plan. All right, so that's it for me, folks. Don't really have too much else going on for the week. There's no class tomorrow, but tune in for the currency trading room on Saturday. And that's it for me. I'll see you guys next week. Take care, traders. Safe and happy trading.